and play this
Are
just
you
one more
feeling
time.
the frustration of the you earn more, you pay more scenario and watching your hard earned savings erode due to taxes? Imagine you could not only turbocharge your tax liability, but also positively impact the world. Break free from the cycle of excessive taxes and discover a strategy that transforms your financial landscape. We are talking about the Charitable Mineral Strategy, a powerful approach that goes beyond giving back, offering a unique opportunity to optimize your financial situation. At its core, this partnership strategy empowers series members to make impactful contributions toward philanthropic endeavors. Under U.S. tax laws, compelling incentives exist for charitable donations, enabling contributors to lower their taxable income effectively. Particularly noteworthy is the provision that allows contributors to deduct the fair market value of assets, such as volcanic ash, when donated. This approach allows you to secure a tax deduction against your regular income, an amount up to 4 times your cash investment. Join our upcoming webinar to explore how these benefits can lighten your tax burden, strengthen your wealth, and supercharge your tax deductions using our definitive playbook. But that's not all. Did you know you can unlock even more tax-saving potential with a personalized consultation? Secure a complimentary 30-minute discovery call and explore how our solutions can guarantee at least 4x of your investment in tax savings. Remember, you still have time to schedule your appointment before the end of the year. See you in the webinar.
All right, everyone, we're going to go ahead and get started. Thank you, everyone who has joined. And for those who are viewing this afterwards, we appreciate your attention to this very important end of year tax strategy. What we have before us right now, and there's not a lot of time left, here we are, December 14th. For those of you who are putting things off to the very last minute, this is your webinar. And so for those who are interested in up to at least, I say up to at least, but for many, we try to reverse engineer it so you're getting the maximum possible deduction through this supercharged charitable tax deduction. And we do it with minerals. What are these minerals used for and where do they go and how do you get the deduction? We're going to cover all of those items here today in this presentation. And as you have questions, as I'm presenting, feel free to reach out and comment, and we'll try to cover those as we go on through. All right, so I'm going to share my screen. We have a little presentation that we prepared for you today. And let's see here if I can get this to share. All right, does everybody see that? Okay, very good. I'm getting some thumbs up. So a turbocharged charitable contribution, and again, there's a little QR code anytime during the meeting if you feel like this is something that you'd like to see if it works in your particular scenario, you can scan that QR code. It'll give you access to a calendar that you can actually book appointments on. In fact, I'd love for a couple people just to go ahead and test it out, make sure that it works. Sometimes technology is our friend, sometimes it's not. So feel free to go ahead and click. Who am I? My name is Jake Miller, and I've helped coach CPAs, financial advisors, and every now and then an attorney. Very beneficial high-level tax strategies. Everything from what is a deferred sales trust to the correct and proper way to take advantage of the tax deductions for business owners through micro captives and much, much more. Of course, whenever there's something good out there, there's somebody who's also abused it. And so it's important that we educate you on the to-dos and the not to-dos and the right way to do things correctly. And the devil is often in the details. So we need to make sure that we have those details and packet of information with all the supporting documents ready to go. So that should you ever get asked 2 or 3 or 4 years down the road why you did this today, you have that answer. Or if you can't remember what the answer is, you've got the documentation. That's the important thing. here we are, a philanthropic partnership that aligns with tax incentives for charitable contributions. Very good, Nick. I see that you have your hand raised. Nika, I apologize. I said your name wrong. Nika, if you'd like to go ahead and maybe type a question in the chat in the Q&A, I'll answer it as we go through the questions here. Appreciate your participation. Anyway, a philanthropic partnership that aligns with tax incentives for charitable contributions. This particular philanthropic participation is where you are able to purchase an LLC right now. This LLC is a series LLC, which means that there is a master LLC. And when I say master, think of like a parent LLC with a bunch of children LLCs, right? So this Delaware Master LLC and all of these children LLCs have been participating in the collection, gathering, and extracting of volcanic ash from the mountain. Volcanic ash is the prime ingredient in soil conditioner, also known as fertilizer. Fertilizer for people that have dirt that is otherwise unsuitable to grow things in. They need to add or provide this additive to their soil, which oftentimes is hard rock, clay, whatever. You mix in this good soil, this ultra rich fertilizer with this terrible clay, rock hard soil, whatever, and now you can grow tomatoes, fruits and vegetables, things that can help a society or a community become self-reliant and not have to just import all their food from out of their country, such as Haiti. The philanthropic process here is that you're able to actually buy one of these LLCs that has been involved in this process for longer than a year. You can purchase this LLC, and at the end of the day, you check a box, or I guess in the application process, you check this box so that when the dirt from the mountain that is associated with your series LLC gets refined, sifted, sorted, packaged, well, now it's a 50-pound bag, or several 50-pound bags, or several 50-pound bags on a pallet, or several pallets of 50-pound bags of fertilizer. And of course, all finished and done, it's worth more than what the LLC owned as a raw mountainous dirt. And so you can see that as time goes by and elapses, things are being done. There's an operation that turns the mountain dirt into a finished good product that is worth more. You are able to take advantage of that growth without having to pay taxes on it because you're going to donate it to a nonprofit, to a foundation. This foundation that supports the people in Haiti become independent and self-sufficient by helping them grow their own fruits and vegetables. Where, if we all recall, a dozen or so years ago, they lost all their topsoil. There was the earthquake, tsunami, big splash. It was on the news and the headlines everywhere. And the entire world, we went to the grocery store, bought what we could so that it could be air flighted, lifted, dropped in Haiti for the people during this time of devastation. Nowadays, Haiti is not in the headlines anymore. But because of this strategy, we're able to help them get the help that they need. So this is our philanthropic partnership that aligns with tax incentives to turbocharge your ability. Because at the end of the day, you put your money in this, and let's say that you do 50,000, which is the minimum. You're going to go ahead and do $50,000. And that $50,000, by the time it ends up in packaged bags, so the dirt, filtered, strained, packaged, processed, loaded on pallets, out at the dock, up comes a certified appraiser. That certified appraiser then looks at everything that's going on the ship. He does his mathematics, he does his calculations, he does everything that he needs to do so that he can stamp his seal of approval and say, this donation is worth this much money at a bulk wholesale pricing. Now, again, if you were to take the same dirt that's now packaged and ready to go, if you were to sell it on eBay, you could probably get more than the value that the appraiser is going to put it at. The appraiser is going at bulk wholesale pricing. If you were to sell on eBay, that would be, if you were to sell it on eBay, that would be retail pricing. So different pricing structure, but out of ultra conservatism, the pricing of everything being donated together is a much more conservative approach. And we like to be conservative when we're talking about very large tax deductions. And so, again, $50,000 or more, and we like to reverse engineer or calculate based on what your tax liability is, what the right number could be. And that needs to be on one-on-one discussion. But let's say you put in $50,000 at the end of the day, based on prior year appraisals, that could come in at a 4 times multiple, or that could give you a 4 times tax benefit or offset to your taxes, which again, $50,000 by 4 is $200,000. And $200,000, if you have an AGI of 1 million or an adjusted gross income or taxable income of $1 million, you would be able to decrease what's being taxed from 1 million all the way down to 800,000 with just a $50,000 participation purchase of an LLC that owns some mountain dirt that he then again goes through this process to improve upon what that dirt is to filter out a lot of the other stuff and get to the prime ingredient that we're looking for, which is volcanic ash, throw in a few other additives, and then package it in 50-pound bags. Now it's worth more, substantially more. But at the end of the day, we're going to donate it with everybody else. Your little series LLC with my little series LLC with everybody else's series LLC. We all load our pallets of fertilizer together up on the docks, gets appraised, goes on the ship, ends up in Haiti. Now the people have the means by which they can actually grow in that rock hard clay dirt that's left over after the tsunami took away all their topsoil. So that, in a nutshell, more or less, is the charitable mineral tax strategy. I'm going to go through the slide just really fast. Come back here. There we go. We've got some nice little things here that you can. Let's actually just test this out real fast. I didn't really mention arbitrage, but there's obviously a really nice delta that you can get. Let's say that you're from the state of Cali taxation. Um, I say Cali taxation or California, and you're in the highest income tax bracket. So federally, you're paying 37%, and state of California up to 13.3%, and maybe San Francisco tax of another 1%, whatever. What I'm getting at is you're paying over 50% taxes, 50% of all your money, practically, based on the brackets that you're in. If you were to do something like this and you put in $50,000 in there and 50% of every dollar that you make, you're paying taxes on, there's an arbitrage that you're going to be able to receive. So there's additional incentive and motivation rather than looking at other tax strategies. Here with this one, what you're able to do is if I put in $50,000, California resident, San Francisco, I'm going to get a $200,000 offset. What does that offset do for me? So if I put in 50, I got a $200,000 offset. That's going to save me over $100,000 in taxes. So what is the net difference? Well, by putting in 50,000 here, you saved 100 in taxes. So your net is you're better off by 50, or that's your arbitrage or delta. Hope that makes sense. And again, that's just super quick ballpark calculation. Everybody here on this call probably lives in a different state. And based on your state, you may or may not have state income taxes. And even if you don't have state income taxes, if you're only being taxed at the federal level, like some good residents here on this call from Texas, then this still works. There's still an arbitrage. You don't have to worry about the burden of state income taxes like maybe some of the other people on this call do, but you are still able to save and have a net positive number, which proves that from an efficiency standpoint, these tax incentives that are eligible through the government, because the government allows us to do things like this, we're benefiting other communities or we're benefiting our own community through strategies like this. And that's why they allow us to move money around in such a way that we get a deferral, a deduction, or an exemption. And in this particular strategy, we're getting a very nice charitable deduction on the improvements made on a product that originally didn't cost us as much, but over time and through this process, the value was improved upon, and we get the deduction of the assets that are essentially donated to the foundation, not our original cost of the LLC to participate. And no, it could be between 4, it could be 5. There is no hard and fast guarantee it's going to be one number or another number. But based on historical appraisals over the last couple of years, it's come in around 4 times. And so we did actually talk with the appraiser, just kind of like a little acknowledgement, asking him about inflation, asking him about the economy, asking if there's going to be anything that might affect his appraisal and cause it to be dramatically different than years prior. And of course, nothing is a hard and fast until he gives us the appraisal number. But he did indicate that there really wasn't anything going on in the economy that would cause the appraisal to be vastly different than years prior. So that gives us a little bit of certainty that it'll probably come in at a 4 times multiple, probably. Minimum contribution, $50,000. You are limited as far as how much benefit you can take in 1 year. any given year based on non-cash charitable contribution limitations. That's up to 30% of your AGI. So let's run through a scenario. Let's say you have 500,000 that is taxable. Or let's say you're a W-2 income employee and you have 500,000 that comes to you on a W-2. And you're normally going to get taxed on that. Now, of course, there's standard deductions, all these other things, but let's just keep it simple and say $500,000, you're taxable. If you were to do the minimum, which is $50,000, that's going to give you a $200,000 offset. If we say that your income is only 500,000, 30% of your income, you're going to be capped at how much of that $200,000 offset you can receive to 30% of your income. 30% of 30% of $500,000 income is $150,000. So in participating in this program and buying that LLC for $50,000 and then getting the $200,000 offset, that $200,000 offset, you're able to take 150 of it this year and you don't lose the other 50. It rolls over next year. And as long as you're aware of that, and as long as you're okay with doing 2 years of planning or a little bit of planning for what you can right now and what gets rolled over to next year, that's okay. Again, we don't have to make it so that you only are contributing to where you only benefit this year. We actually have some clients who want to be a little bit more philanthropic and give a little bit more, and they know and understand that if they supersede that 30% threshold, they don't lose the benefit, it just rolls over to future years. But that's important for you to know that if you are doing this mostly for the tax deduction and not just to be philanthropic, but or if you're trying to align your goals, your financial economic goals, hey, I want to get the biggest bang for my buck while making a difference at the same time. We can adjust those numbers within reason up to down to the minimum, which is $50,000. Another scenario, if you're making, let's say, $1 million and you put in 100,000, it's going to give you a $400,000 offset. If you're making $1 million, 30% of your AGI, 30% of your AGI, your taxable income is 300,000. So you're going to get a $400,000 offset where there's a threshold or limitation at 300, which means that this year you'll maximize up to the threshold of what you can take at 300 and have 100 that rolls over to next year. I like giving examples because that helps people visualize what their benefit is. Yeah, application deadline is mid-December. We did get permission to extend a few more days. So technically, we're mid-December right now. But if you are interested or if you'd like more information and if you'd like somebody to analyze your specific situation, feel free to click on the QR code, enter in your details, and somebody will give you a call. And again, there's no cost, there's no obligation for us to just give you a thumbs up or a thumbs down, like, hey, this is good for you, or maybe next year, or whatever, right? But there needs to be some communication literally in the next couple of days before they close down the program for the year. People do like to go on holidays. Last year, we didn't do this. And I literally was with the family on the beach in Mexico, feet in the sand, feet in the water, and glued to my phone, right? We don't want to do that again this year. So if you are interested in what we can do for you, please reach out and schedule a call. I'm going to go ahead and give you just one moment there to take down some information. Then I'm going to go through Q&A, okay? So give me just one moment. Somebody's knocking on my door, so I got to go see what they want, and I'll be right back. All right, I'm back. They just wanted to know if I needed anything in the minibar. I tell them that I drink enough water. All right, it looks like there's a typo in the URL that we're missing a C. Strategic Tax Solutions. Should be strategictaxsolutions.com. Thank you, Joe. I appreciate that. So for everybody, we do have a little typo there on the website, or right there. It should be strategictaxsolutions.com. It looks like it's good on this final slide. All right. And has the IRS ever looked at this, and is there any exposure there? Great question, Jeff. The IRS, I would not say that they've, let's see here. My video's not on. Can you guys see me now? All right, very good. The IRS Per se, having looked at this strategy, I've had 3 clients who have been audited. 2 of them were actual audits. They were audited because of something else, but the IRS, of course, in typical fashion, wanted to look at everything else that they were doing. The IRS looked at these 2 strategies and just requested more information, and it was fine. The third client, it wasn't so much an audit. Essentially, the accountant, and not a member of my team, but the accountant forgot to check a box on the return. It was just a little box check, easy thing to miss. And the IRS sent them a letter. It was a notice saying, we think you filled out your return wrong. And if you don't fix it, we're going to charge you this much money. That accountant reached out to us. We helped them get it fixed. It was just a simple amendment, literally just checking a box. And no problems. The IRS accepted that amendment and they got that deduction. None of my clients have had this disallowed. They've all had this accepted. This tax program is not a new program. It's not really like a lot of other strategies maybe you've heard unless you've been in the arts and antiquities industry, where this is incredibly common. Somebody has a very famous painting, or maybe they had a painting and then the painter died and then the painting became famous, whatever. Essentially, they bought it at one price and then they donated it to a museum at a much larger price because it had appreciated, became famous, artist died. One reason or another, they bought it at X and they sold it maybe at 10X. And they were able to get the deduction. I'm sorry, they didn't sell, they gifted or donated to a museum or a nonprofit or a charity, something that benefits the community. So in the world of arts and antiquities, this has been going on for plus over a century. And they get the fair market value deduction against the ordinary income limited to that 30% of AGI. So in tax strategies, sometimes if it's not a certified appraiser that is doing the appraisal, that's saying that, like if somebody's just like trying to do it themselves and like, hey, my painting, I think it's worth X, the IRS doesn't go for that. It has to be a certified appraiser that fills out a very lengthy report. You have to fill out additional forms on your tax returns, and then you have to add these addendums or these supporting documents from the appraiser. And then, of course, it's appraised in bulk. Everybody's series LLCs, mine, yours, everybody else's, gets appraised together, and then we get our percentage of that bulk appraisal. And so it does complicate your taxes a little bit, but we've successfully helped out all of the accountants in the past that are not directly on our team that are your accountants. We've been able to help them have successful tax filings for this strategy and getting the deduction. Hope that information is helpful. All right, my contact information, phone or email. That was on that slide. I'll show that slide again here in just a minute. Does this actually reduce your AGI or is it more of a tax reduction based on charitable donation? Joe, this is a non-cash charitable contribution that offsets AGI up to 30% of your taxable income. And so this you'll now be filling out Schedule A, itemized deductions, all of these other things. You do, if you're normally a standard deduction person, you lose the standard deduction because you're going over to the other side, the Schedule A. And then, of course, there's the additional forms that you have to fill out, plus add the appraisal and the supplemental documents that go along, explaining everything that's being done. And so this does complicate your tax returns a little bit, but we've been doing it not always with volcanic ash. We did it with magnesium a few years back. But I want to say that roughly this type of strategy for around 7 years, hundreds of clients have been very philanthropic and they've received this deduction since that time. I will say that if you have any questions, like if you're doing your own tax return, we can help you. I mean, it doesn't hurt us to spend 10 minutes and tell you what boxes to check, what information to fill out, where on the tax form to do this, etc. If you're a CPA or a financial advisor on this call, we can help you and your clients figure that out. And there's no problem whatsoever in us assisting you through the process so that you feel assured that we're not just like sometimes you might get a lot of support and help post transaction with some people and then they disappear after. Well, we don't disappear. We are here whenever you need us. If you extend your taxes and you don't file till next October, we're still going to answer our phone and we're still going to help you out. And so I just wanted to relay that message, letting you know that should you do this for the first time and everything for the first time is a little bit clunky, whatever, we can definitely help you through that process. I've had people put in the minimum, $50,000. So there's a question here from Demu about what people have done in the past. Depending on your taxable income, I've had some people put in as little as 50 because that's the minimum. And then I've had other people put in over $1 million. Now, some of the people who put in vastly large amounts of money, they take an extra step. And I feel like it's warranted. They oftentimes, often, when I say often, it's happened maybe three times, two times, four times, but it was the same guy twice. He just did it every year. Where they got a legal opinion letter from a third party attorney, and that's perfectly fine. That's perfectly fine to do. And all that legal opinion letter does is it gives them a little bit of extra assurance that they're basing their decision on not only on the things that I say, but on the things that, a third party unrelated to the transaction attorney reviewing this transaction also says. And that makes sense. It doesn't really make sense because, an attorney might charge you between 6 and 20 grand for a legal opinion letter or a legal tax memo. And so if you're just doing the 50,000, that doesn't really make sense. If you're doing $1 million or 500,000 even, at that point, the cost per savings is much lower. And it makes sense to almost like at buying an insurance policy, getting a third party unrelated individual who is a tax attorney to review your specific tax situation. And again, a legal opinion letter is specific to the taxpayer. So a legal opinion letter for another client of mine does not, how would you say, they don't extend their liability of their legal opinion to that tax client to you as a client unknown to them, if that makes sense. In the past, they have also, the firm doing this contracted with a Las Vegas tax attorney firm to get a legal opinion memo on the strategy itself. So not specific to any client, but just on the strategy itself, there is that legal opinion or tax memo on the strategy itself. And again, of course, everybody's circumstance is different, which is why I say that, hey, this is wonderful. This is fantastic. If you have high income, whether it's W-2 income or business income, high taxable income, this is really good strategy that can save you paying taxes on up to 30% of your taxable income based on that non-cash charitable contribution threshold. Will you give us necessary appraisal docs needed for the tax return? Yes. And that all comes February, March, when it comes time to start filing tax returns, things like that. You get a K1 because of the series, the master series. If you're series LLC, you'll get a K1. That K1 will have all the relevant information on it, as well as in addition to the K1, you'll get the supplemental documents, the appraisal itself, the appraisal on everything, and then information on how much of that appraisal is allocated to your specific transaction. So all the information is provided. And if this is your first time doing this, it might be a little confusing, a little complicated, but you do get a really good, substantial benefit and a nice delta based on what it costs you by that LLC versus what you would have paid in taxes. There's a net result that we can calculate kind of ballpark figure for everyone here and make sure that it makes sense to do it. And there's some people that we tell them flat out, for you and your circumstance, your scenario, is you had that other non-cash charitable contribution and you're limited or whatever, that it may or may not be good for you. But I think that's all the questions so far. I'm going to go back to that slide real fast that has the contact information. And I'm going to share that screen. All right. So the 800 number, 1-800-773-1848. There's two email addresses there. Micah in the office, she processes most of these applications. And then, of course, there's my email address. And you can go to the website and learn more about some of the other tax strategies that we offer at strategictaxsolutions.com. Again, strategictaxsolutions.com. We also have another company called AlphaMark Capital, where oftentimes we're helping people invest directly in other projects all across the Americas, from Canada down to Colombia. So if you have any questions on the tax strategies or on some of the other things that we offer, feel free to reach out. And again, if you feel confident enough that you'd like us to review your specific scenario to see if this is right for you, go ahead and just scan the QR code and jump on the calendar. And I'm just going to test it real fast because I like to test things. Testing. I'm scanning the QR code with my camera and it pulls up. I don't know if you guys can see this. It pulls up this little teeny form where you put in your name, your email address, your phone number, and then three other fields that you fill out, and we're good to schedule an appointment. All right, wonderful. All right, so we have a few more participants than we did when we started. So if anybody has any questions, feel free to reach out, post a comment in the Q&A. If not, we'll call that good for the day. I always like to be precise and only provide as much information as is at as much information as is needed based on who we have here in the audience. So if you want to ask a very particular detailed question or just a general high level question, feel free to do so. Yes, minimum is $50,000. And that's essentially because all of your costs are built in. And the attorneys that help do all the everything on the back end, they say that it's not cost efficient unless they're doing 50,000 or more. And so in years past, it wasn't necessarily 50,000, but this year going forward, the minimum is 50,000. See here. And yes, all relevant documents will be sent out in March, February, March. And thank you, Joe, for that typo. We'll make sure and get that fixed. Wonderful questions, great participation. Thank you so much for being here today. Specifically, Joe, Jeffrey, Demu, appreciate your questions. And should you have specific questions, again, give us a call, reach out, schedule a time on the calendar. We can help you out with this particular tax strategy and possibly others. Now we are really close to the end of the year, but there's still some things that can make a substantial difference on that tax bill that's coming just around the corner. So even though we are December 14th, there's still time. We are at the 11th hour, but that means that there's still time. So if you have questions, now is the time to ask. Give us a call, 1-800-773-1848. Send us an email, micah.m@alphamark.com or jakeM@alphamark.com, or visit us on the website. And if you are ready to schedule an appointment now, feel free. One last chance. Scan your camera over the QR code right there and book an appointment. Thank you, everybody, for joining. Thank you again for your participation. My name is Jake Miller. Should you have any questions now or next year, feel free to reach out. And I'm more than happy to meet you, get to know you, understand your particular and specific scenario, and see what it is that we can do for you that at the end of the day saves you, hopefully. I mean, this is our goal. Every client that is an eligible client to come on board with us, we try to save them. If they're already spending hundreds of thousands of dollars in taxes, we try to save them a substantial amount of that. And if you do engage in our annual program, and we do not save you 3 times more in taxes, we refund our bill. So we have several people who have actually joined an annual program of ours with that guarantee that being part of our annual program, they save a substantial amount of taxes or they get their money back from the annual program. Anyway, thanks everybody. Pleasure meeting you all. Hope you're having a great day and we'll talk soon. Bye-bye.